Hi everyone and welcome to our brand new supply and demand strategy course here on my YouTube channel. In this powerful supply and demand series, we cover the best technical strategy for timing, well, any market actually. Whether you're trading Forex, futures, stocks, or even CFDs, supply and demand is by far the most profitable technical trading strategy if you use it correctly. And that's exactly what I teach you here on my YouTube channel. These videos are fully educational, unscripted, and for everyone who wants to become a professional trader. There's no fluff, no entertainment, just pure value. And if you're new here, please go on my supply and demand channel playlist. We have already covered 16 lessons of our unique supply and demand course. Watch all lessons in the given order, practice all of them, apply it on the charts, and I can guarantee you that you will be trading better and more successful than, let's say, 90% of all traders out there. All right, so a small recap here of our supply and demand three-step mechanical process. We've already covered 2 out of 3 steps. Step number 1, identify location on the higher time frame. Once done, you go to step 2, identify direction, aka trend on the higher time frame. And once this process is completed, you are going to step 3, market timing on the lower time frame. And we use the lower time frame to identify smaller, high-quality supply and demand zones and place our orders. Or in other words, our set, stop entry target. All predefined and all in advance. Now, in terms of agenda for this lesson and the upcoming lessons, we will continue focusing on step 3, market timing on the lower time frame. In the last episode, we have answered the essential question of what are zone qualifiers and why do we need them? Remember, on any given chart, whether you're looking at, let's say, gold, euro dollar, British pound dollar, US 30, any market essentially, you have countless of supply and demand zones. And with zone qualifiers, we can differentiate between good and bad zones, and eventually disregard all the bad zones and only focus and trade the good zones. And this by default, ladies and gentlemen, increases our probability of success tremendously. Now, we covered already one zone qualifier, which is departure, our leg out, right? So we need a strong, explosive leg out because we need to identify institutional activity. Only institutions, ladies and gentlemen, can cause a massive, explosive candle. And today, we complete the zone structure with base duration. So please like, comment, share, and subscribe to the channel. Once this video hits 1,000 likes and let's say, well, 25k views, I will do the next episode of our supply and demand series. So when it comes to base duration, we have to answer following question. How much time did price spend in the zone? Because remember, trading 101, what is a chart essentially, or candlesticks? A chart always represents filled orders. Candlesticks are completed transactions between buyers and sellers. So orders have been filled. But our goal as a trader is to find the hidden institutional unfilled orders. So the concept of supply and demand says the more basing candles you have, or in other words, the more time price spent in a certain area, the more likely it is that most of the orders have been filled, and the next time price will go to when the next time price will go to that particular area, it will go through that area. So consequently, we need less time spent, less time for institutions to fill all their orders and find the imbalance, or in other words, the institutional unfilled orders. Now, we need to differentiate a bit between beginner rules, because to have rules in place, right? We all need to have rules in place, and to act mechanically and objectively. But also we need to look into real world trading application. So as a rule, you can say everything more than 6 candles in the base is not acceptable, and you will disregard the zone. Because you would assume that price spends so much time in that area and institutions had enough time to fill their orders, and the next time price comes back into that area, it will go through. And anything between 1 and 6 candle in the base means your base duration rule is essentially met. Very simple. Again, like mentioned last time, you could use also a grading system, or, well, simplify it just by saying, okay, rule is either breached or rule is met. And here you see your rule card to the right. As a recap, every zone, demand or supply zone, consists of 3 components: leg in, leg out, and your base. And in the base, we need indecisive candles. That's your rule number 1. And rule number 2, you need to have between 1 and 6 indecisive candles in the base. And the concept, less time spent in the basing candles, the more likely we find unfilled orders. Now let's differentiate briefly between beginner rules and real-world application. In the real world, you cannot say, well, 2 basing candles is better than 3, or 3 is better than 4, or 3 is better than 6. It always depends on the overall context. For instance, location, the location of your lower time frame zone. Am I covered by my big brother, etc.? So I personally prefer a few candles over one single candle in the base, actually. And let's say 3 to 4 candles, because for me, this represents a clear accumulation of price. And visually, most of the time, also a very great zone. Because one candle might be, well, deceptive in a way, since it might be not an imbalance, but just a pause in price. Which leads me actually to the next slide. So a formation with one candle in the base, reassembling a rally base rally or a drop base drop, can be quote unquote fake zones, or you can call them, well, speed bumps actually. And this is not an origin of imbalance or the initial move, just a short pause before the continuation of the actual origin of imbalance. So speed bumps are often seen when we have strong momentum either to the up or downside. And as a conclusion, we don't want to trade speed bumps, as they are only, well, as I said, fake zones. Now, in just a minute, once I go into the real charts, I will show you 2 or 3 examples of, well, speed bumps to clarify it more practically. But as a rule of thumb, once you have a strong momentum, either up or down, and multiple same color candles like here on the example, and somewhere in the middle of that strong momentum move, you have a single candle that looks indecisive and has the same color, it's very likely that this is not an imbalance, but just a quick pause in price. Therefore, I personally disregard these areas. So, as a summary, we want to see as few candles as possible. This means institutions have had very little time to fill their orders. The more likely it is for us to find unfilled orders in this particular area. So here in these examples, you see 3 and 2 basing candles before you see a very strong explosive departure from your zone. Well, so now in an isolated way, this represents best case scenario in terms of zone structure, I would say. So very clear in your face structure, something actually that you spot immediately as a zone. If you can spot a clear, nice looking structure immediately without zooming in or out of an area to force something that is not there, these are usually the best zones. So now it's time to go into the charts. Where are the charts? Here we go. Now, I want to show you 5 examples of good zone structure, because there are 5 trades that that we are potentially as a community are in right now, that I called in my Funded Trader Weekly Outlook, that we are trading right now as we speak. So, but let's start with the speed bumps. And you see, I make it also bigger for you to see. Here we go. Now, this is a good example of a speed bump where you have a strong momentum to the downside, and you see in the middle of that strong momentum move, you have a drop, base, drop. But this is an indecisive candle, and then you have a very strong move out as well. So someone could highlight this as a zone, because hey, well, leg out, zone structure, all meets all rules. But in context, in real market environment, this I would classify as a speed bump, because this is part of that strong momentum move. It's only one candle, same color candle as well. So it's not an imbalance per se. It's just a pause in price before price continues to go lower. And you can also see here that price, when it came up, it just went through like a hot knife through butter. Let me show you more examples. Here I have one more on the euro dollar that is actually a speed bump, and you see it right here. And I'll make it also bigger for you. Here we go. Again, from a zone structure perspective, a very good looking zone. You have a drop, a base, and a nice drop. But again, look at this whole momentum move. It's just a strong momentum, and it's just a pause in price rather than a nice imbalance. And part of that strong momentum, in the middle of that strong momentum, you have that basing candles. So you see that drop, base, drop, and price just also here went through that drop, base, drop. And even with the stop loss, with our stop loss rule, which is 33% of the zone would not have worked, right? So again, it's more like a fake zone or a speed bump in this case. Now I have, I think, one more. Yeah, here we go on a British pound, US dollar. Here we go. You see also here from a zone, just the zone structure, you have a clear, nice chop, base, chop. But it's, again, part. So what classifies a speed bump? You have a strong momentum to one side, here to the downside. And in the middle of that move, you have one single candle. It's the same color candle. And you see zone structure, all right, makes sense. But here also, you got a little bit of movement here, but then also it just went through like a hot knife through butter, so it didn't work. So remember what classifies speed bump: strong momentum to one side, either up or down. You have in the middle of that move, you have only one candle. It's the same color candle here as well. And this are zones that I would completely disregard. Now, let's look at the trades that I'm in and the community is in right now as we speak. There is a short right now on the euro dollar from this area here, and I'll make it also bigger for you to see. And then we just look in a very isolated way just at the zone structure. You see here, you have a drop, base, 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 base. So actually 1, 2, 3, 4, 5 basing candles. So rule is met. Anything between 1 and 6 is okay. And then you have a nice drop here as well. So strong move to the downside here. And you see how price came just a couple of days ago. Into that area. And then now eventually it collapsed here, right? So again, from a zone structure point of view, basing candles leg out, all rules are met. Very, very good looking zone. Now on the USD Swiss franc, there's a long right now, and I want to show you the zone as well here from a zone structure point of view. You have here a drop, a base, 2 candles in the base, and then, I mean, if this is not a leg out, then I don't know. This is like in your face, right? I mean, this is the most obvious institutional activity that you can have. Very strong leg out, drop, base, drop. Again, here, a clear zone from a zone structure, in your face, picture perfect zone. And here you see also price is up here to the right. Price is reacting right now as we speak from that zone very, very nicely. Now we have here on the USD JPY, I want to show it to you as well. Here on a 960-minute chart, so 16-hour chart, a chart that I like as well. You see here we have only one candle in the base, but it's not in the middle of the move. It's actually at the beginning of the origin. You see a drop, base, rally. It's not a rally, base, rally or drop, base, drop. That would classify more like a speed bump up. But here, it's like a drop, base, rally, very nice leg out, one candle in the base. So zone structure, all rules met. And you see also here, we see a phenomenon that just touched, and now the rest so far is history. And we are making big time profits here. And well, I want to show you 2 more exceptional trades that are running right now. Again, just from a zone structure point of view, here we have, and this is now quite interesting, and I will tease one of our next lessons here, which is level on top of level, because here, look at the zone that I called in my Thunder Trader Weekly Outlook is a rally, base. But look how many basing candles here. 1, 2, 3, 4, 5, 6, 7. Hey, Bernd, you just said 1 to 6, more than 6 is not acceptable. This is true in an isolated way. But this is part of a level on top of level structure. Because the proximal level you have here. So it's an overlapping level on top of level. So that's the distal level, that's the proximal level. So that level, the proximal level, is a reaction of the level above of the distal level. So that's the real imbalance. And that's why this level is valid, and then you can time it based on the distal level, because the rule of the distal level would be everything that looks like a level is a level, basically, because the proximal level is high quality down there. But again, I'll make a separate lesson on level on top of level, because this is also a super important concept. And you see price came in, and look at this massive drop here. And we had a potential add-on on this trade, or even a new trade on a British pound. Where is it? It's down here. I want to show it to you as well, because here as well, from a zone structure perspective, well, it's a picture perfect trade. Look at this here. It's just amazing. You have a drop, 3 candles in a base. You see clear as it cannot be clearer than that. A drop, a base, 3 candles in a base, and then a nice drop. Price came back, and look how it reacted. It was like a swing sniper entry, basically. But again, from a zone structure point of view, basing candles, rule mat, leg out, rule mat, picture perfect zone, picture perfect trades. So very good trades running right now as well. So that's it for this lesson. I hope you enjoyed it. And yeah, we catch up in the next lesson. And let me know how you enjoyed this lesson as well in the comment section. And your love is very much appreciated. Thank you so much, and talk to you next time. Bye-bye.